This is Tech Tuesday, where we shine the spotlight on a trending theme in the world of technology and gain a better understanding of where trends are leading in the world of tech investment. This is Tech Tuesday, presented by the Canadian Securities Exchange.
Hi, everyone. It's James Black here from the Canadian Securities Exchange, welcoming you to another edition of Tech Tuesday. This week is another private company showcase, and we collaborated with Access Innovation from Israel to present 3 companies today on the show. For those of you who may not have tuned in before to Tech Tuesday, the purpose of the show is really twofold. The first is to provide companies' profile and traction on an accessible platform here on the show. And the second reason is to give capital markets participants and investors insight into new trends and new themes in the world of technology by profiling real live companies. We've got a great lineup of companies on the show today, including Avi Schapiro from Parsempo, Moshe Lebowitz from Healables, and Magnus Almqvist from Exberry. Each company will provide a 7-minute presentation, which will be followed by a Q&A session with today's special guest moderator, Mr. Mark Francis. Now, just a couple of housekeeping matters. If you're having any issues with your connection today, just note that we are broadcasting this on LinkedIn, Facebook, and YouTube. Just look us up under CSE TV on YouTube, and you should get a clean connection there. And on anywhere where you're watching, don't forget to subscribe or hit like or give us some feedback on what you would like to see us cover on the show. And also note our disclaimer. This presentation is for information only and not a solicitation to make an investment in either shares or debt or to buy or sell stock. We make no representation about any of these companies. If you're interested in the investor pitch, please connect with the companies directly in order to get more detailed information. And as I mentioned, we did collaborate with Access Innovation on this episode, and I'd like to introduce their CEO, Ed Frank, to give more information about the organization and their mission.
Hello, my name is Ed Frank. I'm the CEO of Access Innovation, joining you here from Tel Aviv, Israel. It's a pleasure reaching out to all of you investors and corporations in Canada. We've had really good connections with Canada. We had an Israel Innovation Day last year prior to COVID in Toronto with a number of Israeli companies. And we've had events actually in Ottawa going back a while. So we really feel that there's a growing connection between Israel and Canada. We've also done work for the Canadian Embassy in Israel to help identify technology solutions that could offer synergies between Israel and Canada. So today, I just want to give you a few minute background on Access Innovation. We have 3 exciting Israeli startups. We're based in Tel Aviv, and we work a lot with some of the world's largest corporations to find solutions to their technology and business challenges, primarily in Israel. And we also work with some investors who are looking to find solutions to round out their portfolio. So the work that we do at Access Innovation works, again, on our corporate consulting, where we help identify solutions that can solve specific problems. We've worked with more than 25 companies on their funding rounds as an investment advisory firm. And we also have done a number of conferences. Our most recent conference was last month, and 3 of the startups today that are presenting were fortunate to be at our conference. We had participants from 16 countries around the world and more than 50 multinational corporations looking for new technologies. We work on our deal flow. That's the most important part of our company. And we work on different sectors ranging from mobility to digital transformation, fintech, and digital health as well. We've had a lot of results over these past 10 years, and we've created relationships all around the world. Some of the corporations and sectors that we cover, as I mentioned, range from Ford and Mercedes to Centrica, MasterCard, Visa, IKEA, and some others. And today we have had a number of deals in different sectors, and a number of those have gone on to some significant exits. We build personal relationships with many of the founders and understand what is it they're looking for and what countries they're looking to expand into. So we've been involved in this industry of open innovation and innovation sourcing for the past 10 years, and very happy to continue to develop our relationship with Canada, and happy to have you here today. And I'm sure you'll find these 3 companies presenting very exciting. Thanks for joining us.
Wonderful. If I may, just a couple of questions before we get into today's presentations. Maybe just describe to those watching today. We've had a lot of companies from Israel. From your perspective, just remind folks, what is the secret sauce, or what makes Israel so innovative and have a competitive advantage when it comes to creating, viable innovation-based businesses that are, I guess, exported globally?
Yeah, Israel's quite a small country. It's really a population of 9 million people, and most of the technologies that are developed in Israel are developed for other markets around the world. And the companies you'll see today are perfect examples of that. Israel has a strong technology background, and I think over the past 20 years, the development of the tech ecosystem with more than 300 of the world's largest multinationals and a tremendous amount of venture capital has created the technology sector, the most exciting sector in Israel, attracting people from all over the world.
Understood. And my next question is, through your mentorship and talking to a lot of these companies and guiding them potentially to capital outside of Israel or exporting their innovation, maybe what is the one thing you have to remind Israeli companies, Israeli entrepreneurs about, going outside their own borders and attracting new capital and interest in their businesses? Is there one learning or message you always have to remind them about?
Yeah, I think a lot of the work that we do is aligning expectations, and I think really Israelis move really quickly, and I think the rest of the world moves a little bit slower. And I think some of those investors and corporations that Israeli companies come in with an amazing technology, and they're expecting it to be implemented within a week, and it usually takes a year. And investors that are going to get back to you right away, that right away could be 6 months. And I think patience is not a big virtue in Israel. And I think that's something that we really, we try to align expectations and help these companies understand that people have different priorities. They could be very interested, but sometimes you need to walk before you run.
Right. My last question is, do you have a preference for the type of exit for these companies, whether it be trade sale, go public, organic, or bootstrap? What sort of, trajectory do you typically like to advise companies to go towards, or is it just different for every company? There's a different fit for every company.
Well, we're dealing mostly with the earlier stage companies, and I think the trade sale is a more realistic exit for them. I think we're not dealing with companies at the later stages, and I think that also with the volatility in the markets, I think that these people who are behind these startups are in it for the long term. And I think, as you said, each company is different, but our work has been a lot with large corporations who see the open innovation and startups being a source for their most exciting new business development areas. So we're working that area.
Wonderful. Well said. Well, we look forward to seeing everyone present today. Thank you for the introduction and for bringing these opportunities to the viewership today. Much appreciated.
Great. Thank you very much, James. Thank you, Mark, as well.
Thanks again, Frank, for joining the show and for sharing your knowledge and connections with us on today's program. Now to our first presenter, Avi Schapiro of Parsempo. Avi is a co-founder and CEO of Parsempo. Avi is also an associate lecturer for Technion's MBA program. Prior to founding Parsempo, Avi was a managing partner at IntelliLivid Programmatic. Avi has over 10 years of experience building and managing multiple funded tech ventures. Avi, over to you.
Hi, everyone. My name is Avi Schapiro, and I'm the co-founder and CEO at Parsempo. Thank you for this opportunity. It's a real pleasure to present our venture today. So Parsempo, the Internet of Screens. This sort of alludes to the vision or the large-scale perspective that we have in this market, where you have lots of screens out there, and we envision them being connected, data-driven, standardized, and basically decentralized to a large extent. So we are backed by Nielsen, the global media measurement company, and Techstars, and we've recently been joined by another Japanese VC who joined our round, and we have considerable experience in our domain. So I have over a decade of experience building technology ventures, mainly in the marketing tech, e-commerce spaces, with my original background in fintech and private equity. Co-founders, all well-rounded in the either deep tech or marketing spaces. Ephraim Tabakman, our CTO, with 30 years of experience. Moise Navon was the founding engineer at Mobileye, which was sold for $15 billion to Intel. He built the chip and all the generations of the chip till today. Joseph Deutsch, who runs our sales and marketing, was VP sales and marketing for large publicly traded companies, billions of dollars in sales. And now, as we enter the U.S. market, Steve Burkhold joined us, who was the former CEO of Lacoste, Diesel, and many other fashion retail brands, and is on the executive retail team at Cushman & Wakefield. And in Africa, we also have a regional manager over there that has also experience in billions of dollars in sales, primarily in fintech companies. We're in the space where we're talking about these digital displays that are used outside of your home. There are different names for this industry: digital signage, digital out of home. But basically, it's screens that are used for business purposes. We estimate that there are close to 500 million screens already today because of consumer grade screens used in this market as well. But the software and media applications for this market are worth well over $160 billion a year. So the problems that we're solving, this is an old industry. It's a 40-year-old industry. It's been around for a while. There are a lot of players in this market. There's high fragmentation and very low tech, which led to the low barriers of entry. The result of this is that you have these screens across almost every vertical for different types of applications. And all the owners of these screens, or the operators of these screens, suffer from the same problems, which is it's difficult to operate them. It involves lots of parties that do different components of managing these types of networks. Creating content or experiences for these screens is extremely expensive. The cost of ownership is very high. As an example, think of McDonald's. When you go in and you want to use a self-service touch screen, someone needs to create that application, customize it for McDonald's. And then if Burger King wants to do the same thing, then they reinvent the wheel. So that's just a small example. Advertising, which is is getting a lot of hype now. It's the fastest growing media channel in the world, called digital out of home. Is primarily manual. 98% of the transactions out of a $20 billion market today are completely manual, with RFPs and line orders that take 4 to 6 weeks. And the biggest problem is that you have no data. So if you think about this medium as comparing it to mobile and web channels of communication, this medium, despite being digital, has no information, which means that you can't do all the fancy stuff of automation and insights. You can't make this medium as effective as the mobile and web channels that we've grown accustomed to and have made leaps and bounds over the past 2 decades. So what we've done is we've created a single platform, no fragmentation, that's based in technology, where basically we can transform any display, any type of display, from a 5-inch digital self-strip in a supermarket all the way up to billboards, into something intelligent that's able to measure effectiveness, impact on sales, and all kinds of other metrics, where we enable anyone to be able to manage these screens at any scale, with all the built-in capabilities of monetization as well. So if you did want to use these screens for advertising, which is a relatively small user case today, despite being a large market, you can do that too, and it's fully automated. As I was talking about technology, we have patents in the UK and in the US covering a wide range of claims. Basically, it's all around edge computing, IoT sensor fusion, where we leverage the surroundings in order to create a real 360-degree understanding of what's going on around these screens and how these screens influence that environment. So we went live a year ago. We already have clients in all kinds of shapes and forms in different sectors around the world. We're now in 8 countries, from large CPGs to retailers like Walmart and all kinds of different types of brands. And we're continuously growing through our growth strategy. So this is a testimonial from one of Walmart's chief digital officer, where the main objective, Walmart, just so you understand, has over 150 or 160,000 screens across their stores, and their goal was to tie that into what you call omni-channel communications, so they can both connect this into the other ways or the other mediums that are connecting with their clients, and make the medium a lot more efficient to connect with their overall strategy on increasing sales and engagement with their clients. So our business model is primarily SaaS, where we bill on a per screen, per month basis or an annual basis. And additionally, we have marketplaces that are built into our applications for different types of user cases that include applications like quick service restaurant applications, or queue management, or augmented reality games, and applications for retail or healthcare, as well as content itself. And of course, we have a full-on automated advertising exchange, which anyone can implement. So the way that we approach this market is we have sales pods. A sales pod is operated by Parsempo, where we do direct sales. And one of the big benefits is that we also deliver a lot of value add to the ecosystem around us, from the display manufacturers all the way to the integrators or IT professionals. And what that sales pod does is it continuously expands our pipeline, where we're supporting all kinds of projects and innovations that are or just existing businesses in this industry, where they are building their business, and it enhances their business to build it on the foundations of our technology, increasing their value proposition and their sales. And this has proven itself quite well so far. And in the competitive landscape, so there are many companies that have been operating out there. Canada is actually, there are a number of companies in Canada that have been around for, I think, over 2 decades. that have done well for themselves, and we also consider them in our competitive landscape. However, we position ourselves in the world of data, which is also why Nielsen is believing in us to be the forefront of how the space is measured. And if you can't measure it, then what's the point? So we've been mainly an R&D venture since inception, and as we launched last year commercially, now we're moving up and scaling up our sales. We're close to $500,000 in sales and ARR, and now we are progressing towards, in this round, hitting that 1 million ARR benchmark, and the sky's the limit. And that's it in a nutshell. Thank you.
Thanks again, Avi, for a great presentation. Now to our second presenter of the day, Moshe Lebowitz, CEO and co-founder of Healables. Moshe is a visionary who believes that humanity is on a positive trajectory and that we all have a responsibility to solve today's biggest health challenges. He has previously served as a UI and UX designer, product manager, and CEO. Moshe uses his rabbinic training to solve business problems differently and innovates through the creative integration of technology together with new inventions. Moshe practices Hasidic meditation and is trained in craniosacral therapy and Chinese medicine. Over to you, Moshe, for your presentation.
Hi, I'm Moshe Lebowitz, CEO and founder of Healables, wearables that heal. Health today means, do we choose the red pill or the blue pill? So there's $1 trillion revenue in pills just in 2021. Huge market. But what if we could replace pills with a chip? And that's Healables, wearables that heal. So we heal people with smart clothing instead of with drugs. Our mission is we relieve pain, accelerate healing, and reduce inflammation without medication. So I founded Healables because 15 years ago, I had a traumatic brain injury. What I learned in my journey of recovery is that you need to treat the mind and the body together. So I recruited a fantastic team. Our chief medical officer comes out of Harvard. Our CTO comes from Johns Hopkins. CFO, Yehuda Barbash, has a lot of experience in finance. And we have that winning team to go and produce this fantastic product. So chronic pain, chronic illness, sports injuries, it's a huge market, and we have a solution. So when it comes to electrotherapy today, it's a little bit backwards. Competitors look like the slide on the left, and they feel like the picture on the right. Merck has invested in a technology, a chip that can relieve inflammation by putting a chip in people's brains and turning them into cyborgs. So the technology works, but you don't have to be a cyborg in order to get the benefit. We do it with wearables. We have a wearable device that docks with our smart textile. We have proprietary dry electrodes that deliver personalized microcurrent therapy. And the electrodes also function as sensors that provide real-time feedback that goes back to our backend. And then our behavioral health coach allows the patients and athletes to be able to improve their mental health at the same time. So we get a 3D profile of the person. Finally, practitioners can not just remotely monitor, but they can remotely adjust the treatment in real time. So AniSleeve is just our first product. Our one device docks with any of our smart textiles, and we deliver our platform technology to the wellness and sports vertical that does not require medical certification, as well as the same platform will also have FDA and medical CE as well. So in internal user testing, we see of 64 users, 88% reported pain relief of at least 50%. This is life-changing without medication. And some user stories. Avi Yosef is a professional soccer player, for those of us in North America, and he had a meniscus tear, was out, depressed, used our device, we got him back after 2 weeks, scored the winning goal of the game, and he was just super, super excited. And then Jonathan Strauss, he had fibromyalgia for 15 years, pain every day, tried everything. When he came to us and tried our device, he relieved his pain for the first time in 15 years, so much so that he went and he invested $65,000 as an angel investor. So we're doing really two treatments at the same time, the microcurrent electrotherapy for the body and the behavioral health coaching for the mind. We have a whole patent portfolio internationally. And again, our platform technology can treat a wide variety of inflammatory conditions from the knees all the way through the lungs and to the brain. We currently have a sports pilot with the Stade Français Paris rugby team, and we have clinical trials with the Wolfson Medical Center, the sports medicine department, a clinical trial in knee osteoarthritis, and other trials in the works for diabetic neuropathy and lower back pain. So we have sports partnerships that we are in the process of signing. We have 2 companies in India that are going to be a total of about 90,000 devices in the coming 3 years. And we have a company in China as well that has 15,000 rehab centers that'll be at least 150,000 devices. So these are just 2 distribution partners just to start with. And really, there are companies all over the world that are looking for a solution. We have people reaching out to us every day asking for partnerships. So our medical roadmap takes us through many different inflammatory conditions, from the chronic pain crisis throughout North America, MSK, which is a huge issue, respiratory, diabetes, diabetic neuropathy, and we have a solution for long COVID as well. So there are other devices in the market, but they don't have this combination of microcurrent, textiles, and AI-driven behavioral health coaching. And that's the winning combination that makes our solution disruptive. We have a hybrid 2/3 SaaS, 1/3 device recurring revenue model, both for the wellness out-of-pocket market as well as the medical market that will be coming in from about 2024. We're currently doing a $5 million Series A raise, and that's going to be to continue launching the sports product and build the AI for the next generation product. So just to conclude, Michael Jordan said, some people want it to happen, some wish it would happen, and others make it happen. At Healables, we make it happen. We're excited to work with investors that share our vision of healing the world with a device without medication. Thank you.
All right, gentlemen, this is now what we call the Inquisition of Tech Tuesday, and I'm joined by Mark Francis, who is our common moderator on these as well. And we're going to ask you a bunch of questions. We're going to try to get some good answers here around specifics around the businesses, but also your experiences as entrepreneurs to this point running these businesses. Moshe, I know what your pain point was in your presentation. It was pretty evident that you went through an injury, and this catalyzed your mission to produce these wearables and start this mission with that company. Avi, what was your point of inflection where you realized you had to solve a problem? Can you talk to us about that?
I think that in general, I'm constantly solving problems. I think that that's sort of wired into the DNA. Is you're solving problems at home, you're solving problems at work, you're always solving problems. But when you're solving problems at a larger scale, I think in this case is when you feel a personal touch point, where you feel that pain yourself, and then you go out and explore and you say, is this really a problem? Is the problem significant enough that has an impact? Moshe gave a great presentation, and I think that healing the world is a great message. So I don't think that drawing parallels. I'm not healing the world, not in that sense. And I think that the mission that we're on is more of a technical pain. You see like this inefficiency, which is screaming at you, and as you investigate it and you feel that pain yourself and the companies that you're associated with, at some point you're just someone's got to do it. And if I don't do it, someone else is going to do it. And the question is this opportunity big enough, and is the impact big enough? And we believe it is.
Tell us about a mistake you made and what you did to fix it. And let's go with Avi and then Moshe.
Wow. These are like interview questions that, you're always, you're constantly making mistakes. And then the ideal is not to repeat them. And sometimes you even you make mistakes at that as well. I think the largest mistake on the business end, was my first venture. I don't know how long I have for the story, so I'll try to shorten it. We were about to do a Series A round, several $1 million, bunch of investors committed, and the CTO had a heart attack, a massive heart attack. We're sitting in the hospital with his kids and everything, and I'm like, don't worry about it. We'll wait. And we waited, and we waited, and we waited, and it was the venture was good, and the investors were like, "Look, you need it's not happening. You need to let him go." And there's a line in entrepreneurship. There's a line that gets crossed when you're working and you're huddling together working on building this venture where even though you got together professionally, those lines get crossed and you become friends. So then you have to make business decisions, and at the same time, you have to sort of disassociate yourself from that friendship. And I didn't do that. And I waited too long, and eventually that mistake cost us. Obviously, there's more stuff around it, but that was a big mistake. That was a large business mistake that I made that I will not repeat.
Yeah, I think with Healables, I really started from the point, we heal the mind and we heal the body. I actually started from the point of behavioral health back in 2017. And I did my research, spoke to all these experts, and everybody said, behavioral health, just healing people from an app, you have no way to monetize that. It's just impossible. You have to go and make sure you have a hardware component. And I thought about it. I said, wow, we can add microcurrent, and that would be fantastic. And it is. And we're really excited about what we're doing. But the world has shifted with the pandemic, and everybody's like, oh, you have a hardware component? Oh, why can't you just do everything with software? And, so I think that I think what you learn is that you really, when you're an entrepreneur, that you really have to stick to your gut and stay focused and listen to what people say. But if you have an intuition, you got to go with it. And we're trying to do more of that. But I think that in the end, what we have where we heal the mind and heal the body is really a winning combination.
Yeah. Now I'm going to shift a bit into the technology side. So both of your companies are creating data points in scenarios where maybe 10 or 15 years ago, there weren't data points. So if you walk by a sign, the sign would be dumb. It would just be a billboard, and it would stare at you and you'd stare back at it, and there'd be no exchange of data. With wearable tech, I mean, we're still early days in quantified self, I would say, but now you're putting on a knee brace and it's giving you real-time information. It's giving you diagnostic and potentially a treatment plan based on the AI algorithm running underneath it, I'm assuming. Now, I got to ask, and we often ask this question on the show, which is, how is the data going to be secured? Because I assume at some point, as you collect this data, it has to be warehoused somewhere. It has to be shared with other apps. Maybe there's APIs connected to this. Who knows? But the point is that you're now working with very personal data, especially with your business, Moshe. And then Avi, obviously, I want to know more about, what happens with the data you collect as people maybe passively give up data. And let's start with you. How is the data being exchanged from the user that is influencing your platform?
So technology is a very large component of what we're doing, which is why we spend a bunch of time in R&D. Mm-hmm. In the end, measurement, there are all kinds of forms of measurement. Measuring things in the real world is very different than a self-contained environment like a mobile device or a screen where I can measure clicks or page loads or click-through rates or when someone touches something. Here, even though there is a touch component, in most cases you can't, which means that we need to leverage the sensory surroundings that exist, like beacons and Bluetooth, and now ultra-wideband is getting cheaper and easier to deploy vision-based systems or image sensors. So the key is what you call sensory fusion. We have all this data that's coming in from a bunch of sources, and we need to be able to basically anonymize that data. So we're a software company, right? So we're enabling hardware, but we don't care what that hardware is. We're hardware agnostic. So what happens is that our software basically leverages and understands the sensory surroundings, but everything is done on edge. We're working with a number of sensor creators or developers where basically now they have like on-chip processing capabilities. So basically it's about coding those capabilities on the chip where everything has to be completely anonymized, GDPR, CCPA compliant. So no matter what medium you're using, nothing sensitive is ever being stored by us. Everything is done on the hardware level, on the edge. We're just enabling that. So we're very careful about meddling around with anything around privacy, especially what's going on in the online world. I'm sure you're aware of now. So, so that's really our forte. And more than that, it's about calibrating that you're actually measuring the right thing, right? If you have a billboard, let's say, if that's what you wanted to do, you wanted to measure this for advertising, then if I said that 1 million people saw your billboard a day, how do I know that for sure? Right? There's all kinds of sensors. So calibrating that information, calibrating the sensors to do that is something that's right. That's a very unique capability that we have.
Moshe, just talk about, again, data security and where your data travels as it gets collected. And if you have, safeguards in place to make sure that, personal data is not going to go somewhere it shouldn't.
Well, the short answer is yes. The long answer, we don't have time to talk about. But we treat all data, whether or not technically it's actually is personal health records. We treat all data as if it were personal health records, and then have all the HIPAA compliance and GDPR and all the compliances to make sure that it's secured at the highest levels.
Understood.
Each of you are generating a lot of data, and you have assumptions underlying that. And a lot of people have a lot of assumptions underlying interpretation of that data. And one of the things AI will give us is an ability to challenge our assumptions. We're seeing this in a lot of places. We even see it in the geological world, where AI can challenge some assumptions. So talk to us more about what you're doing with AI on an ongoing basis and how it will challenge assumptions that are made, whether it relates to marketing of information or, in fact, the program that someone is undertaking and the assumptions. People, when they're trying to heal, make a lot of assumptions about what might be good for them, and maybe it's not working. So Moshe and then Avi.
Sure. So the way our AI system works is, first of all, supervised learning in terms of looking at the decisions that the patient makes and the decisions that the practitioner makes. We have a whole load of assumptions that we assume for our treatment, and then it's just data driven. When you look at all the data and then you compare it, that's where you get the deep IP and being able to personalize, get precision medicine. People are trying to do that with drugs. We're trying to get precision medicine with drugs, but when you can download your prescription directly into your mind and body, it happens instantly. And I think that's what you get that's the point where we want to get to with AI and we can get those changes in real time to personalize and get the precision treatment.
So my answer would actually be maybe a little longer. I can really go into detail. So in our world, when you're communicating, then you make assumptions, as you said, Mark, and then the thing is that you have to be able to test those assumptions. And the problem is if you can't test them, then you're just throwing unfounded assumptions into the air all the time. This is a well-known thing in marketing, which is why web and mobile is great, because then you could see what the effect is. And in this space, it's a little different because you have different goals. Depending on who the profile is, you may want to increase sales, you may want to decrease costs, you may want to increase what you call top of mind awareness. There's all kinds of different. So the typical method that was done today by most research firms is that you have a panel. All right, you have a statistical panel and you use that information, but that panel is expensive and it's not good enough to represent everything that's going on. So when we look at this from the data points, the data that we're able to collect enables us to do two things. It enables us to understand what's actually going on. Imagine that every display or every visual unit becomes this autonomous being that understands what its environment is and who's engaging with it, and what experiences need to be shown to that person or allow them to interact to maximize efficiency. And the way that happens is it learns. It learns based on engagements and based on that type of profile of an environment, how to improve itself without my involvement. So me as an operator, if I'm, let's say, I'll give you a live user case, right? I'm Walmart. I have thousands of screens spread across different sectors of my stores. And one is I have no idea if I'm creating the right experience or content, right? Maybe I want to promote a certain item in the TV section, right? And say there's a discount. Am I showing the right type of promotion to the right audience? So what we had found is that, 60-plus-year-old couples are there between 7 and 9 a.m., right? And then from 11 to 1 p.m., it's young mothers and children, and then teenagers. So if I was hands-on, I would go nuts creating information for them and then scheduling. So imagine that the system can do that automatically. It learns by itself, and it can create the content by itself. It can create and showcase that experience by itself, and it can do all those optimizations. And this is huge. This is so different than what's going on today. And then the second aspect is that if you are in the business of advertising, which I think James alluded to is a separate conversation, then in the world of performance, if I want to be on your screens, on some billboard or on a network of screens in your grocery, right? I'm Coca-Cola or AB InBev, and I want to pay Walmart to be on their screens. How do I know what I'm going to get? What's the underlying asset that I'm paying for? And if I'm going to do that in the future, then I have to be able to project what's going to happen in the future or I have to predict in order to do that. So that's where the data science comes in again, right? It's predictions on behavior. And that allows you to automate everything and allows you to make everything a lot more efficient.
Gentlemen, the ultimate question, raising of capital. Moshe, you indicated you want to raise $5 million. Avi, are you looking to do a raise? And Moshe, do you have a strategic investor in mind or a particular profile? Because we see that Parsempo has a very good strategic investor in Nielsen, thinking about you in that regard. So Avi and then Moshe.
So we started around in the beginning, I guess 3 months ago, for $2.5 million to give us 18 to 20 months of runway to hit the goals that I mentioned in the deck. But basically, it's to surpass the 1 million ARR. We have the sales pipeline and the corroborating evidence to justify that. So we have a very detailed deal room. So we already have half of that committed by a Japanese VC. Nielsen increased their investment. The Israeli government is invested in us as well, and some of our original angels also increased their investments. So we're not doing a larger, we're very capital efficient. So we have like a very detailed roadmap. We know what we're doing. Everything that we're developing is based on client requests. We've done like the deep techs. We've de-risked a lot of the elements that are associated with our business. Now it's about execution and scale. So that's essentially where we are. So we have half a round committed. A lot of in fundraising, there's a lot of talk, but you say that there's a saying, I guess, in Hebrew and probably in any other language, where you count the money at the when you're going down the stairs from the bank. So that's essentially where we are. We're moving forward regardless.
So if you look at our product, what you see is that our product sits at the convergence of textiles, electronics, sports, wellness, medicine. So when it comes to a strategic investor, a corporate investor, or angels, anybody from celebrity athletes to celebrity doctors to textile companies, semiconductor companies, or pharmaceutical companies are really the types of people that we're having discussions with and that are excited about getting into the consumerization of health. So I think that everybody's really, from so many different angles, and of course from the data side as well, so is moving into this space of the consumerization of health. And we're excited to speak to, really, we hope it would be a whole array of investors that can come and approach that place from different angles, because I think that's really what's needed to take this hybrid product and make a completely disruptive change the world. So we're excited.
Fascinating. Well, I think that pretty much gives us our full 10-minute allocation for this section of the Inquisition. I will say that after listening to you both, there might actually be more relatable stuff between your two businesses than I had originally thought. Healables, you're talking about the mind and the body and cognition, and you, Avi, you're talking about delivering information through screens. And I can imagine a world, maybe I'll take the red pill for a sec, that at some point our minds are going to be kind of red and our bodies are going to be sort of used as a indicator for the type of information that we get back from our outside world, our physical world. And maybe we're not too far from that in today's reality, and seeing your businesses do these two things might not be too disparate as we look toward the future. So good luck to you both and in your businesses. And we look forward to seeing you in a future Tech Tuesday as you guys continue to reach more of your milestones and goals. And thank you, Mark, for helping me co-host this moderation. Great Q&A, guys. And thanks again for participating today, Moshe and Avi. Now to our final speaker of the day, Magnus Almqvist, Head of Exchange Development for Exberry. As Exberry's Head of Exchange Development, Magnus builds and nourishes contacts with exchange and marketplace pioneers around the globe, with 20 years experience behind him. With a background as Head of Sales at Equus Exchange, Senior Business Development Manager at FIS, and prior to that, heading up Smart Group's London office, and as the CTO of the London Stock Exchange Group company EDX, Magnus has a solid understanding of capital markets exchanges, their ecosystems, and their evolving universe, including digital assets and use of blockchain. Swedish-born Magnus holds a master's degree in electrical engineering from Stockholm's Royal Institute of Technology and has extensive knowledge and experience in both the market surveillance technology and matching engine space. Over to you, Magnus.
Before I dive into the details here, just very quickly, yes, about myself. So my name is Magnus. I head up sales globally at Exberry. I've been with the company just over 2 years, and I'm part of the founding team within Exberry. I have a solid background in capital markets. As you might guess, I have a Scandinavian background. So I'm from Stockholm originally. I grew up, started my career at OMX, the Scandi exchange operator that's now in effect the tech division within Nasdaq. And I've had the pleasure to through my career, work with national stock exchanges and tier one vendors, and see the whole evolution of the trading landscape as it evolved from pit trading onto electronic trading through electronic sort of high frequency, low latency trading onto where we are today with digitized products, blockchains, and an explosive creativity that is happening right now. So very excited about presentations, presenting Exberry to you, and to then have this Q&A with you, of course, to discuss how we kind of address the market and what we potentially can do together here. So just to emphasize, and you know this just as well as I probably, the world of exchanges and marketplaces is growing exponentially right now, and the landscape is changing drastically. Through the last 20-25 years, I would say that the creativity and the speed and the rate of innovation is higher today than it was 20 years ago at the onset of electronic trading. However, and this is where Exberry comes in, the infrastructure supporting the markets today is outdated and slow and expensive, and it's not really fit for purpose. So there is a gap here, there is an opportunity here, and that is what Exberry is looking to exploit. So if we look at the total addressable market, we estimate it to be in the region of 170 billion. We should never forget the traditional world, while there is a huge innovation and an explosion in the number of exchanges. I think also the traditional markets are rapidly adopting digitized technologies, and we will see huge growth in both new markets and crypto markets and traditional markets. So what is the problem today? Well, if you're an existing stock exchange wanting to innovate, if you're an ex-trader or someone like that with a bright idea, you want to start a new marketplace, you go out and talk to existing vendors. What you find is that technology that is offered to you is outdated. It's not really suitable for the new digitized world. Time to market is often measured in over a year, and the initial investments are often north of $1 million. All of this stimulates innovation, it slows down growth, and for national stock exchanges or national markets, they often find themselves heavily burdened by existing technology costs and slowness in innovation. So Exberry, what we have done with a significant R&D effort is that we've built a cloud-native SaaS-delivered solution, a very, very strong SaaS foundation, on top of which we've built a very, very high-performant, scalable, and capable central limit order book and matching engine that meets regulatory requirements. And broadening on from that sort of minimum viable product that entered the market heavily about a year ago, we've then built also a full-on end-to-end turnkey solution that can service any kind of new exchange or marketplace. Our infrastructure, our solutions are at the very core asset agnostic and also blockchain agnostic. So we service both traditional and new exchanges and marketplaces. And this is also a key selling point, is that we allow close to zero time to market and a very flexible cost structure that makes us run circles around competition. So I can launch a sandbox after this call if you are interested in getting your hands dirty. I can launch a new production instance for you in a couple of days. So we have about 14 paying customers today. Accumulated ARR is in the region of or north of 2 million. So very happy growth, very aggressive growth. And for me, being so long in this market, I'm just astonished to see the uptake and the acceptance of our technology in this very niche market. And of these 14 customers, I would say about half are traditional markets with traditional sort of asset creation and settlement and custody structures, and the other half are more modern digitized structures that involve private ledgers or public blockchains. One or two customers are pure crypto exchanges, but they are in the minority. So just to summarize, what I've been trying to communicate here is that we provide an exchange as a service, or our solutions are SaaS-based. We are agnostic to asset classes from the very core and design of the solution. We support both traditional structures and modern structures, very flexible in a cloud-native and multi-tenanted environment, in that we can allow our prospects or our customers to start very, very small and scale up seamlessly to very large installations without any kind of upgrades and so on, with a very fast time to market. So the platform is highly performant, and I just want to emphasize a couple of key figures here. Is that we at the sustained load of 100 TPS, we measure a very healthy 16 microsecond latency in the fourth quartile. So that kind of makes us benchmark very, very well with the largest providers of solutions out there. And we do this on standard cloud architecture. And we measure this port to port, and are kind of not cheating on the actual measurements there. So customers, a couple of really strong names. Abax is the latest name that will not appear on this slide. We signed a contract just a couple of days ago. Voltex, I think, are very exciting. Influencer Index, LDX, a few others. Very strong partners that we work with. Our partner network, I think, is very strong. Bay Markets, Clara, for example, for risk-based futures markets like Abax. And digital asset, of course, we have a great out-of-the-box solution with Bay Markets. Together with Finastra, we focus on the banking world. It's great to be able to present Exberry to you. So in a nutshell, we're severely disrupting the world of exchanges and marketplaces, in that we provide a end-to-end turnkey solution for any kind of marketplace, and we supply a very, very highly capable cloud-native matching engine to the traditional exchange market.
Thank you very much, Magnus.
Sure.
And, my first question is more for the clarity for our viewers and listeners. And that is that you aren't seeking to compete with exchanges. You are seeking to compete with the trading platform that existing exchanges use. Is that correct?
That's correct. We're a pure technology vendor. We provide technology solutions and services to exchanges and marketplaces.
Right. And so when you say that about 50% or maybe 7 out of the 14 are traditional marketplaces, do you mean traditional existing stock exchanges or existing commodities exchanges?
Yes, that too. And also new entrants in that more traditional space.
Okay, so you mean ATSs, for instance, what we call ATSs in Canada and North America?
Yes. Yes.
So alternative trading systems, or ECNs, or the British have another word for them as well. So how many actual stock exchange platforms would you that are linked into clearing systems would you have as clients at this point?
So it's 2 or 3 exchanges that today interface to traditional clearing systems.
Okay. And does your system integrate with the actual clearing systems?
Yes, we do. So exactly that. So we would need to stream real-time trade details to them, and help them with the data they need to calculate settlement prices, and for any kind of pre-trade risk that they need to do, also to stream data that they need for that purpose.
Okay, and thinking about commodities, are you the big commodities platforms? Oil is the largest traded commodity in the world. The WTI contract. If there's a successful commodity contract out there, that's it. But I know that 10 years ago there was an over-the-counter market that was really struggling. It tried to come out and resolve an issue, and that is that you've got a lot of agricultural products which simply aren't sufficiently liquid. Delivery points varied. One example was lettuce in California, which is a huge market, but so splintered, it was really hard. Can your platform resolve that challenge?
we certainly can help address it. And I think that is a super exciting area, actually. And I'm talking to several prospects in that area right now. The how we help them is through two different aspects. One is simply the price point. The cost of launching this platform and keeping it running is much lower than it used to be. So it's only 10 years ago. The other way is the mobility or accessibility of the platform. So it's quite easy to build trading interfaces that are mobile based. So for your farmers, for your small traders, for your small buyers, they can actually handle their buys and sells on a mobile phone or a tablet or something like that. The third aspect is that blockchain is an amazing platform that allows you to handle the logistics part of this. So the asset creation, the farmers, the producers that have a crop they want to sell, to kind of get it on a blockchain, to then seamlessly integrate that with your marketplace where the new crop is described in detail with source information, with any kind of quality certification, and etc. Can be automated and streamlined, and again can be mobile based. To then make them available for trading, have some kind of auction process or continuous trading, to then have those trades generate orders for physical delivery. Again, the blockchain is connected, and you can trace delivery. And that delivery can be very fragmented. It can be small suppliers distributed over a huge area, and you can still always kind of clock where they are and trace delivery and follow all the way from the supermarket shelf all the way to the farmer.
Right. So, and forgive me for going down this rabbit hole, because I know it's not a significant portion of your target market, but the impact could be huge. One of the challenges in both Africa and Asia has been for agricultural producers to get a decent price for their product, and also the whole delivery chain mechanism. So how do you see approaching that? Do you think that your system will be inexpensive enough that it'll allow for smaller markets to actually grasp this efficiency and price discovery to the benefit of millions of small scale producers, right?
Yeah, exactly. I mean, and you hit the nail on the head there. Because we're talking millions, this thing really scales. So the price per kind of user can be really low, and we still see significant revenue. And it's actually a part of the market that I passionately believe in myself. I think because we have a multi-tenant platform, because we can be so efficient in the service delivery, we can allow initial price points to be very low and start with very small markets. And it's the same with the logistics kind of solution that we have on board as part of our partner network that also can start very small and scale. And again, it's the certification, the logistics chain, the logging, it's all mobile based. So it really lends itself to a sort of kind of mobile based economy like you often see in sub-Saharan Africa, for example.
Okay, so swinging back to perhaps the more immediate marketplaces, because you'll have to justify your economics. You say you're approaching 2 million in ARR. Is that sufficient to get you to cash flow positive? What do you need to get to cash flow positive at this point?
So our burn rate now is just north of 1 million. So we're very close to being this. In the next couple of months, we should be cash flow positive.
That's pretty impressive, because you have to have a lot of high-powered people to continue the development, et cetera.
Yeah, no, it is a lean, efficient organization.
Right. So your primary targets, you talked a little bit in one of your slides about your target business going forward and how it would shift. So talk to me about who your next profile of your next 5 or 10 customers.
Sure, absolutely. So one target that we certainly have are the likes of national stock exchanges or existing incumbent ATSs and MTFs that are looking for innovation, that are looking to offer digitized assets to their client base. And rather than investing in the existing tech stack where they have already a very busy change schedule, and for various reasons it might not be practical, then we can offer a very cost efficient and short, quick time to market alternative where they very quickly can spin up an alternative matching engine and offer these new services. So that's one segment where we have active conversations right now. Another segment where we see great success as well is kind of new initiatives similar to the ABAX, that is sort of Canadian and Singapore based, very, very sort of heavily invested in the traditional carbon space, for example. So we have a few other similar conversations in traditional commodities markets like that, where people are looking to disrupt and innovate the status quo. So that's another pillar. The third pillar are various forms of digitized assets that are popping up, and that area is huge. It's so wide, the different kinds of things I see there. One common theme is futures-based assets, with the underlying asset being something kind of completely outside of the box from what we typically see today. So a couple of examples there is the music industry. So for example, so allowing investors to invest in the next great hit or the next big star, and allowing the record companies or the publishing companies to hedge the risks when they onboard a new singer, for example. Similar products I see in the gaming industry. So Fortnite and Counter-Strike players. Again, a huge audience, 60 million wide fan base looking to punt, a couple of quid of investments or a couple of dollars investments on their gaming sort of gaming house they believe in, but huge revenues. Sports betting prediction markets, so binary option structures, that is quite tightly also linked into the ILS market and insurance linked kind of similar kind of markets. We also see a lot of innovation right now. So that digitized space, this breadth is just enormous.
Yes, we'll leave insurance aside for a moment because I know that there are a lot of challenges there, but there's huge appetite and generally limited players, but they need the assurance of blockchain and with insurance, of course, you have partial payments that proceed out of the reinsurance, et cetera. So that can be a fairly complex process, but they're looking for solutions. We know that. You seem to be targeting an awful lot of different marketplaces. That can be distracting. Is there one in particular on which you're going to focus to try and maximize your market penetration early?
That is a great question, and we continuously debate this internally, because at the moment we actually are comfortable with what from the outside probably looks like a bit of a fragmented market. The underlying solution is agnostic, and for us we kind of don't care that much exactly what the asset is. So we've seen that ability to scale quite liberally across huge different spaces. But where we see the kind of the large money flows, the biggest revenues right now, they are in the kind of more traditional space, even if they are digitized. But it's the commodities market. We see quite a lot of traction. But also in the discussions with national stock exchanges and helping them innovate. Right.
Okay. So I have the penultimate question. Tell us about a mistake you made and what you did to fix it.
It's a good question. I don't know. I feel like I kind of make mistakes quite frequently. So it's a big bucket to pick from. But I think mistakes that we did early on was to not be bold enough, to not, we have a great technology. We have an amazing platform, and we're now in effect competing with the big, huge birds in this market. And it can be a bit intimidating as a small startup to kind of credibly say, well, actually, I have a credible solution compared to what you can buy from NASDAQ at a 50th of the price, you really should go with it. And to be much more bold in that statement, I think is a mistake that I certainly did initially, being a bit too humble.
Right. Well, thank you for that. And my final question, I mean, I'd love to, I've consulted the stock exchanges now for over 20 years, a couple of the different ones, and we could talk for hours here. So I have to go to the final one. It seems as if you're heading for cash flow positive in very short order. Do you need to do another capital raise, or are you thinking of doing so? And if so, will there be a strategic partner in the deal, or are you just looking for capital?
The best would be smart money. We're very comfortable where we are, and we're very well funded. So we are in the luxurious position where we can kind of be a bit choosy about it. But we're looking at a 15 million raise at a 40 million pre-evaluation kind of raise.
A $15 million raise?
Yeah.
Okay.
Yeah, and we would use that money to substantially accelerate our growth. So while we're growing today, we're recruiting people, we're kind of expanding, but we can substantially accelerate that with a bit of injection.
Very good. Thank you very much, Magnus Almqvist, Exberry. Thank you for being with us today on Tech Tuesday. And thank you to Axis Innovations for giving us an excellent Tech Tuesday series of presentations.
Thank you, Magnus, and thank you, Mark, for a great Q&A session and great presentation. Now, thank you to all the people who have worked behind the scenes on today's Tech Tuesday, including Anil Mall, Barrington Miller, Melissa Robertson, and of course, today's moderator, Mark Francis. Lastly, thank you to the attendees for taking a slice of your day to learn and support the companies on Tech Tuesday. And don't forget to go to the company websites to learn more information. Now, next Tuesday, we have another private company showcase, and this time in collaboration with Valhalla Angels. You don't want to miss it. We've got two excellent presentations coming up and two fantastic entrepreneurs. And finally, this has been a proud presentation of the Canadian Securities Exchange. For more information about the exchange, its listed companies, and for trading data, look no further than www.thecse.com. Thanks again for watching, and may you have continued success in expanding your businesses.